Добрый день. Hello, good afternoon, ladies and gentlemen. George Grisham speaking with you from Dania, Spain, talking with you about insurance. The reference number of this talk is 2.0, which means that we finally reached the second level. Yes, we're still at the basics, but now we are at the practical basis. And today, we're going to talk with you about risks to business, physical risks, legal risks, financial, and which types of cover, which types of insurance can an insurance company, insurance markets offer to an enterprise, medium, small, big corporation. The types of insurances are very much the same. So if you've learned them at the level of a company with 3 employees, you'll be able to buy the same for a company with 10,000. And of course, down below it says which kinds of insurance you can purchase via auction insurance. Auction insurance is my company, is our company. It's a Lloyd's broker, and we work in all of these branches. So you're always welcome in the practical side, as regards the practical side. Anyway, let's start. We are talking about types or classes of insurance for corporate bodies. We are forgetting at the moment about motor insurance, personal accident, health insurance. They do exist, but they're purchased simultaneously by private individuals and by corporations. Now we're more talking more about covers for corporations. And in this case, from this point of view, you always have to remember the object and the subject matter insured. Especially actually the object of insurance, which is insurable interest, which is the very, very tiny legal connection between an insured, a corporation, a company, and the subject matter, which may be property, liability to third parties, and so forth. But there is a legal interest, an insurable interest in between. So technically, the subject matter is property or liability. But the object of insurance is this particular relationship. And because of the different nature of these relationships, we have so many types of corporate insurances. And we're going to list only the most important ones, like the classes rather than the types. So let's begin. Insurance on land started with what was called fire insurance, just against fires. That's understandable. All the buildings, or most of the buildings, were from wood. And then, of course, it spread around, it started developing, and now we have what's called all risks property damage, or all risks physical damage covers, which start from flexa. These are the 3 most important positions: fire, lightning, and explosion. And then they are extended towards anything like avalanches, unusual snow, melting, floods, of course, and so on and so forth. And of course, there, in this type of insurance, and PD, what we call, you have to watch whether your policy is all risks with some exclusions or listed perils. And you have to check these listed perils very, very attentively. So PD is the first most important class for any insured. MB, machinery breakdown. Well, it's not covered in respect of your car, unfortunately. We'd love to, unless you bought extended warranty and so forth. But it was covered for ships about 100 years ago, and it is covered now for big enterprises like, for instance, power plants and so forth. Machinery breakdown. Yes, yes, yes. We insure what you've heard. We insure repair expenses, substitution expenses, including spares. And the price of this insurance on some technological plants, like, again, the energy generation plant, the fire risk will be probably 10 times less expensive than machinery breakdown, because repairing a huge turbine, which itself costs 40 to 60 million euros or dollars, is much more expensive than actually putting down the results of a fire. So position number 2, machinery breakdown, MB. Number 3, completely financial type of insurance, BI. Business interruption, where you either cover loss of profit, and you have to calculate this profit. So that's why I put calculator down here. It is a very accounting-based type of insurance. Or you have to prove what, not your profit, but your fixed expenses were. And in case of a fire, you still have to carry, well, your company still has to carry these fixed expenses. So first of all, yes, we're in the times of COVID now. We have quarantine. That's why I'm writing down all these lectures. I have more time without travel. And yes, most unfortunately, there is an exclusion. COVID is not included in lots of business interruption policies, but in some it is. And it's up to you to check it out. But in most cases, BI policy or BI extension of a policy is combined or is attached to PD or MB. So you have fire, you have explosion, you have breakdown of machinery, then your company unfortunately stops for a while, and business interruption or loss of profit caused by this particular physical event would be covered, not by quarantine or any actions of the state. This may be covered somewhere else, but not in standard and classical business interruption. And another little cover, sometimes not very little, related to business interruption is called DSU or ALOP. DSU stands for delay in startup. ALOP means advanced loss of profit. You have a project. You are building a hotel, a retail center, whatever. And you've calculated that this particular hotel will be bringing you $1 million a year, a month, an hour, whatever. You need to have all bits and pieces supplied, furniture, machinery, generators, conditioners, and so forth, air conditioning machines, and you need to have everything built up. So if there is a fire or explosion at the construction site, your object, the hotel will be constructed much later. So you'll be losing advanced profit. You've already calculated it. Or for instance, just a delay in delivering cargoes. This famous above mentioned furnitures, just because some vessel sank. So again, you're going to lose future income. There is a delay in startup DSU, and you can cover this as an extension to cargo policy or to construction policy, which we're going to speak about in a minute. Then, number 4, a huge group, technically called third-party liabilities insurances. Yes, a joy for a lawyer, a solicitor, but of course you have different types of third-party liabilities. For instance, for injury, death, or illness of third parties, for loss or damage to property of third parties. A very important liability is environmental impairment. It used to be called environmental pollution liability. Impairment is much broader aspect. Product liability, you've manufactured a turbine again, a generator, you've supplied it to third country, and then it exploded or whatever. And there are some injuries or loss of profit or loss of property there. It's covered by product liability. IT risks, a new sphere, but very important. We call it sometimes computer crime or whatever. Professional indemnity, most important for medical profession, for legal profession, accountants, architects, of course. Such a hard type of insurance, but you can have it. Which similar to it are errors and emissions. For instance, we were doing errors and emissions on cinema industry. That was an interesting one. We did it in Lloyd's finally. So any type of enterprise, any type of company, whether it's medium or small enterprise or a huge corporation, first of all, I'm thinking of buying these 4 types of cover. They're really the minimum which any particular business can survive with. And again, we start with what I call the property trilogy or triad, PD and BBI, PD, physical damage or fire, and all risks, MB, machinery breakdown, business interruption, BI. And then you're talking about TPLL, third-party legal liability or general legal liability, general third-party. There are different names, but really there are different types of covers. And you'll see these types of insurance in all branches, oil and gas, aviation. My own sphere of insurance, first of all, is marine. I was born in marine insurance, well, not physically, but born as a specialist 36 years ago in 1984, and I've been doing marine insurance since then. And in marine, we have very much the same. We have hull and machinery, which is nothing else as combined PD and MB. Yes, machinery, hull and machinery insurance, the marine hull, was where the MB idea, the machinery breakdown cover, was born about 100 years ago. Then we have BI, which in marine speak is called the LOH, loss of hire. And then we have third-party liability, which is sometimes called ship owner's liability, but most usually is called P&I, protection and indemnity. So protection and indemnity is my favorite type, favorite class of insurance, which actually I've been dealing with for 36 years. Now, these four have to be, of course, sometimes in some different situations extended. First of all, any process, any corporate at some different stages has to buy two different types of insurances depending on whether it's operating a particular object or it's just building it. These are different risks, and construction or erection process is covered under CAR-ER, which means construction or erection all risks. And this is a very interesting type of insurance which combines property, i.e. property at the construction site, financial risks, because you purchase it at the very design stage. You're still paying for the design. There are no works, not even digging a big hole in the land started, but you already spent some money. So these financial these expenses will be covered under CR and ER if something physical happens. Not because, for instance, the design bureau goes bust, but because you have an earthquake at the construction site and your expenses will be covered. Also, of course, it includes third-party liabilities, then different guarantees. Yes, the object was put in operation, for instance, a pipeline, and pipeline means lots of pumping stations, and somehow or other it breaks down in a year's time. So sometimes these particular expenses related to the guarantees provided would be covered under CR. And finally, delay in startup we have already explained. Another interesting class, which is becoming very, very popular over the last probably 20 to 30 years, is directors and officers. In general, we are talking about legal expenses insurance. It's as if you're purchasing lawyers in advance. You're paying for legal expenses insurance. Directors and officers is a type of liability insurance where third parties can have their material interests damaged or hurt because of some, for instance, articles or speeches of a director of a company. For instance, they spoke about some problems in the company and the value of shares went down in the stock exchange. Right, a minority shareholder is quite ready to raise first a complaint and then a claim on the director personally and also on the company. Look, he's lost money because of these directors' actions. And this is an amazing type of insurance where you have legal expenses covered, but if, for instance, the director and the company were not able to protect the interest, were not able to win a legal case, then the actual big amount which is payable to that particular claimant, the minority shareholder, whether it will be covered under D&O policy or not, it's always a question mark. Please always check the wordings. Credit, surety, bonds, BBB, a very, very sophisticated type of insurance. I'm always saying, if you want to buy it, then be ready to a long dialogue with an insurance company, which will be very much the same to a dialogue with a bank or a financial company when you are trying to raise a loan. You have to provide lots of information, business plans, former previous reports and accounts, and so on and so forth. This is a huge, let's say, sphere of insurance. The most probably developed, highly developed is policies called BBB, Bankers Blanket Bonds, which are in overall also very, very sophisticated policies. But we also have just normal bonds, for instance, for construction companies, where they have to provide performance bonds. And again, this could be provided by a bank or by an insurance company. And we have credit and surety and so forth. An intriguing but a difficult type of insurance to obtain, especially for a new company. Well, sad events, political violence. This type of insurance was called war risks on land. Then there was always a cover of terrorist risks. And now we have PV as a class, which sometimes includes even bigger, broader risks like political risk, confiscation, nationalization. Sometimes it's just very, very narrow, just violence as such, not actions of authorities. So you have to probably differ between political violence and political risks. Political risks are broader, but anyway, they can include, as far as political risks, lots of different bits and pieces, and you have to be very precise at what do you want to have covered. For instance, currency non-convertibility, or actions of local authorities as opposed to actions of federal or central authorities, PV. And well, that's about it. Of course, there are hundreds of other types of covers. They do exist everywhere. But we at Oakshot Insurance, we love to limit ourselves to these, to the ones I have enumerated. We understand them, we work in them, we're ready to help you with placing them. Oakshot is a Lloyd's broker. It's very easy to find us. Our email is fantastic. It was invented by Barry Pierce about 25 years ago. It's wecanhelp@oakinsure.com. My personal email is grishins@me.com, and you can always find me, George Grishin, in Facebook, in LinkedIn, and so on and so forth. Thank you very much for your attention. That was the first edition of the second stage of our talks on insurance, and we'll see you soon. Bye.